We think those kind of the banks and Telstra are still should be part of a retiree or a investor's portfolio. We still think there's a role for them to play there. They're sitting on very good yields. Their valuation is not too demanding at the moment compared with some other stocks in the market. However, we still think their businesses are fairly challenged. So if you look at the banks, we're not expecting loan growth to go up significantly. Fortunately, the property market seems to have been rallying again, so we don't expect bad debts to pick up at all. So we're not expecting kind of major reductions in earnings, but we're not expecting huge growth there. So I wouldn't be going into those stocks expecting a huge amount of growth, but we do think given their large yield that they're paying out, they can be a valuable part of a portfolio. One of the things we're really worried about at Plato is protecting the capital value of our retirees in general portfolio. And so when you looked at in the case of ANZ, NAB and Westpac, who have all cut their dividends over the last 2 years, none of them really fell on the day that they cut their dividends because the market was already fully pricing it in. Their yields had rallied to be, if they'd have maintained their dividends, they would have been on a yield above 10%. And so the market was expecting them to cut, and that's what they did. And the market was even asking them to cut it in some of the cases where you talk to the management and they're like, we were told to kind of get it, make our balance sheet stronger. And so the market was kind of pricing that. So all those major banks have a yield of around 7.8 to 8.3% at the moment. They're all quite tight when you look at their kind of fully franked yields. And at Plato, our portfolios are often generating higher than that income, but with a very diversified portfolio. One of the dividend traps that we are concerned about, that we have been for a while, is AMP. Now, it might not be a traditional dividend trap because they've already actually cut their dividends down to zero, but we think investors should still be wary about moving back into it because there's still a lot of challenges undergoing their business. Another area that could be in danger of cutting their dividends is the media sector, which are on very high yields at the moment, but we think they're in danger of being cut given the pressure on the media sector in general at the moment.